Well, he's taken this and what's in the markets for the week ahead. We're joined by Pete McGuire from XM on the program. Pete, good to go and see you there. Hope you had a fantastic weekend. Not the best environment, though, when it comes to geopolitics, but that's creating plenty of opportunities in markets.
Well, good morning, David. Good morning, Cara. Absolutely. It's been, Friday just really, I think, stunned everyone as far as that big push up. I look at crude and we're up nearly 3.5%. What's going on for a 94 handle, 94.5 for Brent? We're not only $5 away from 100, so that triple digit. Geopolitics, risk premium, all built in. US dollar strengthened too, David, and you had a massive sell-off as far as US equity. So scorching hot inflation reads, 40-year high, 7.5%, and the fund's about to start with possibly 6.5 rate rises, and we might see 7. Who knows?
All right, so Pete, if you're a trader setting yourself up for this week, volatility is probably going to be a given, seeing that jump in at the VIX that we saw on Friday. What are the asset classes that you'd be looking to trade?
You've got to look at US dollar, Cara, and I think that's the big kahuna in the pack. Let's have a look naturally as far as crude. Gold's had a nice run up at 1842. We've been saying this for a couple of weeks now. There's plenty of upside as far as crude. So you only put your mind back to where we were, $70 just before Christmas, about the mid. So in 2 months, you've seen a rise of nearly $25. So that's dramatic. And I think that momentum will continue. A lot of traders I'm talking to, I spoke in the States yesterday and to Switzerland, and they're all saying that, there's big push up as far as gold. So keep an eye on that, and silver. So they're the ones I'd be looking at, and possibly a further softness as far as equities.
Pete, just on that gold side of the equation, we saw lots and lots of inflows coming through on Friday when it comes to the ETF products at the moment. Could we go and see like a major break high for gold and maybe retest those record highs we saw last year?
Well, David, I think it's got the potential. I'm still saying that gold's going to be, it's underpriced at the moment, and that's a personal view, not necessarily, company view. But really, when you're looking at all of those metrics working together, inflation out of control, I think the government spending will come to a big halt, considering that there's a bit more. It's pretty much in the bag now as far as the midterm elections and what goes on in November. So the Republicans will jump in there. There'd be no further spending. So that's really going to put a handbrake, I think, on a lot of different markets. And I feel as though that there's a lot of uncertainty leading in over the next matter of months. So big news items coming through, global issues, and all of that really creates much turbulence, really, for the fuel to push gold higher.
Pete, where's that balance when it comes to the Australian dollar? Because we're saying oil higher, gold higher, so a good commodities complex, but then we've also got the Fed potentially hiking rates. So where does the balance sit for the Australian dollar against the US?
Well, there's maybe a little bit further upside. It's a great market to trade, Cara. I mean, you can't say, well, where it's going to hit. All I know is it's going to be extremely volatile in the short run. That continuation as far as volatility isn't going away. So it'll probably push a little bit higher from here. I'm waiting to see some minutes coming out from the RBA tomorrow. We've got employment data coming out Thursday. So all of those little bits and pieces, notice that we've got 6 rate rises priced in as far as the big market, the macro view. So God help us what's that going to do as far as the economy come November, December, if you've got, solid rate rises, and that could push the Aussie, 74, 75 cents. I wouldn't be surprised. So that's the view over the year. Hold on to the wheel. It's going to be a bumpy ride.
We know that the Japanese yen is a big carry trade favourite, but it's also a safe haven when it comes to periods of volatility. So how do you see that at the moment? Because it's a really interesting space.
Well, David, I think the yen is just never disappoints. And Mrs Watanabe, as far as the carry trade's concerned, borrowing cheap as far as the yen versus US dollar, there's more potential there. They run it against different currencies, of course, yen euro, yen dollar, yen Aussie, yen Kiwi. It's just a great market to trade, and that really allows, I think, that opportunity. I don't see the rate rises impacting Japan in the short run. I can't see anything movement there. I talk to Japan frequently, and inflation's still fairly soft. So it's nowhere like we've got in the West, so I can't see them raising rates, probably a little bit like Switzerland in that sort of mindset. You've got the yen running at 115.40. Probably it's got a little bit further. I wouldn't be surprised, possibly maybe a 116. It's been an incredible market to trade the yen.
Pete, how does the crypto market react to the geopolitical tensions that we're currently experiencing?
Well, I'd say the continuation as far as volatility, Cara, because it's just been all over the shop. And I think that, we're looking at war premiums built in, and that greatly impacts the commodity side. So I think that crypto trade will be very similar. You're talking about all of that premium. So that really creates, from a trader's perspective, big swings. And whilst there's many of the governments have got their own mind's eye, the blockchain and the deregulation or the framework surrounding crypto is so intriguing, and that's where the traders globally are, very much embedding themselves in that new form of currency. So it's going to be a very fascinating 22 and 23 how that plays, because I think that they've got the youth of today have got a different vision to necessarily central banks' views, and it's going to be fascinating how that all rolls forward.
But just to go and finish off, I know that NASDAQ, a lot of those growth companies are fan favourites here on the Ausbiz platform. From a technical perspective, where do the risks lie when it comes to the NASDAQ, upside or downside?
Well, David, it's 13,791, so it's had a big push down from that 15,000 handle. I think it's probably got further softness because the overall mood at the moment is, what are the numbers looking like? What are the growth potentials for a lot of those technology stocks? And what's 22 and forward earnings? I mean, that's what you learn in business school. Don't worry about what happened before. We're worrying about what's happening in the future. We've put before in the bank, and we're worrying about how it moves forward. So, next quarter earnings, are we going to see continued movement to the upside? April, May, and June. What's that going to look like that quarter? And then leading into the rest of the year. So I think it's uncertainty, and there's the potential for, a further softness.